Tennessee Valley, welcome to Plan Today, Own Tomorrow. I'm your host, Bobby Futch, with Guardian Investment Advisors, and I'm joined today by two fellow great advisors, Tim McDermott and Tanner Moore. Tim, how you doing this morning?
Fantastic, sir. I just got back from a trip with some friends, and we're ready to rock and roll.
That's awesome. You have a good time?
Oh yeah,
That's great.
enjoyed it.
Tanner, what about you, man?
Good, Bobby. How are you doing?
I'm good. It's a good morning. We've had a good week so far, so
Feeling beautiful out now.
I'm excited about it.
Leaves are
Yeah.
changing.
The
Yep.
heat's dying down. It's feeling nice out.
Yeah, after that rain here a couple weeks ago in Chattanooga, it kind of started to cool down a little bit. I'm excited about it. Well, today we've got an exciting show. If you're a small business owner, you know what it's like to wear about 10 different hats every single day. You know, you take care of your customers, your employees, your vendors. Well, we're going to ask today, who's taking care of you, right? That's one of the most important people in a business is the business owner, and they seem to always be looking out for everyone else. So on today's show, we're going to cover some of the most important financial strategies for small business owners. I'm excited about this one. We're going to talk about retirement plans, life insurance, group benefits, and then our favorite thing to talk about on this show is taxes. So stick with us if you own a business. This next show could change the way you look at your finances, and I hope you get some good information out of it to help you get your situation in order while you're running your business.
Lots to do. This will hopefully take some worries off of some of those business owner plates out there, right?
Yeah, and again, there's a lot that goes on to running a business, right? And you're the expert at running your own business if you're the boss. Well, we're going to help you on the financial side of that today, kind of talk about things you can do for your business while you're running it, kind of how you can help out your employees. There are a lot of great things to do on that front, help retention, help be an attractive business. And then make sure one day when you're ready to retire or hang it up that you've kind of squared yourself away. So we're going to start talking about retirement plans here because that's an important part of running a business. And quite frankly, that's why most people run a business.
Sure.
Is so one day they can retire. So let's start with that. A lot of small business owners ask, what's the best way for me to save for retirement? Tim, why don't you walk us through some options on ways that business owners can do that?
Yeah, I kind of grew up around small business owners. My dad was one, and I grew up around a bunch of them. And it was interesting to watch, as you get older and kind of watch what happens. They get absorbed in the day to day, and they forget about the bigger picture of taking care of themselves and how do things kind of pan out for them later on in life. And this is one of those things that you can do right now that not only helps you right now, but also really helps you plan for that retirement process. There's a ton of different plans out there that you can go into. We've all heard of that traditional IRA. We've heard about SEP IRAs, simple IRAs, 401k plans, even 403bs for nonprofits and Roth IRAs. What's the difference? What do they look like? What are they for? Well, that traditional IRA is as basic as it gets, right? If you're using a traditional IRA, you're using that as a simplified, hey, let's throw $7,000-8,000 into a retirement account each year and call it a day, right? It's pretty simple, straightforward. If you're looking to maximize what you can dump into these retirement plans, a SEP IRA may be more beneficial for you. The nice thing about a SEP IRA is it allows you to take that contribution from $7,000 to $8,000 up to about $70,000 a year.
That's a huge jump.
And everything you put into this is tax deductible right now for you, right? So that's a real benefit to a lot of business owners looking to save on taxes. How do I dump money into something that I don't have to pay taxes on right now? We're in this interesting point in our history right now where taxes are about as low as they've ever been. I know we're going to come back to this later on in the show. So it begs the question, should I take the tax deduction now or do I take it later, right? Mm-hmm. And right now, I still know a lot of small business owners that, Bobby, you and I are meeting with on a regular basis that need that tax saving right now.
Right. Even if taxes are going to go up in the future. I mean, some of these business owners, as you're really successful,
that's right.
You've got a whole bunch of income right now.
That's right.
And so, Tanner, one of the best ways that you can help plan for that tax burden is to put tax deferred money away now. Is that right?
Yeah, absolutely. And especially for that business owner that, everybody has a different part of their business, period time frame of their business where maybe they're in a scaling point of that business, right? Mm-hmm. They're growing. There is a proper way, maybe even to scale, depending on which industry you're in, right? There's a lot of companies out there that maybe they grow too fast, and then you have to reduce, size. So that business owner that has a lot of cash flow, that may have that excess income, they're wildly successful. these are great vehicles to use to be able to save for that retirement.
Yeah, and that's a great point. You just mentioned, fluctuating
Yeah.
income for a business. A SEP IRA really works well for somebody that kind of has a regular cash flows.
That's right.
Is that right, Tim?
Yeah, it's a great way to say, okay, I can dump in a bunch this year, but the next year you don't have to put anything in, right? There's
Okay.
no limitations on that. If you've got a fair number of employees, you may look at doing something like a simple IRA or even a 401k plan for your business. The difference being there, simple IRA is just a simplified version of a 401k plan. There's not as many documents to go through. There's also not quite as many options that you get to set up inside that simple IRA. Simple IRAs can be nice because they're very inexpensive. You can kind of set it and just let it go, right?
Yeah.
Whereas a 401k plan allows you to say, okay, well, I want to give my employees the options for hardship withdrawals. If they're going through a hardship in life, they can pull some money out of those 401ks without penalizing them. Even something as simple as doing a loan inside of the program so they can borrow some cash to go buy a house, whatever the case may be. One of the biggest benefits of doing Roth IRAs is that you may be in a high tax bracket, but your employees probably aren't as high of a tax
Yeah.
bracket as you are, right? And so you can opt to have a Roth 401k built into that plan, giving your employees the option to pay the tax now and grow tax free for retirement. That's a big benefit that we see a lot.
That's a good point, Tim. And just to reiterate what you said, with a full-blown 401k plan, which a lot of businesses will do as they get bigger.
That's right.
It's a really good way to attract employees and help retain those folks as employees. The great thing about it is now it's pretty easy to set up a Roth component within that plan,
That's right.
and it doesn't have to be one or the other.
That's right.
You can have some participants in that plan that choose to do the Roth.
Yep.
If they're not making as much money, they don't need the tax deduction. But you, as the business owner, you can pile some pretty good money in a 401k, up to $30,000 in that plan, $31,000 this year.
That's right.
If you want to, and that could be all tax deductible to you as the employer.
Yeah, not just your contribution, but the match that you make to your employees is tax deductible, and the fees associated with running a 401k plan are tax deductible for you.
Yeah.
So there's a lot of tax benefits built in there while you're using those golden handcuffs for your employees at the same time.
Yeah, if you're worried about taxes, we put together a really great tool for everyone to use, and it's completely free. Go to our website, giaplantoday.com, giaplantoday.com. In the top right corner, there's going to be a link to a bunch of calculators. And one of those calculators is our tax planning calculator. It'll allow you to look and see what the benefit of doing Roth or contributions to a retirement account will be, and allow you to do kind of figure out which one of those options is right for you in particular. So giaplantoday.com. I invite you to go take a look at that.
Bobby, I'll throw in one more thing about those Roth IRAs, right? We do have a fair number of people who are really trying to pay those taxes right now because they know we're in one of those lower tax brackets that we've ever been in. And one of the things you can do is called a backdoor Roth IRA. We don't talk about this a whole lot, but when you talk about making too much, in other words, there's an income limit that if you make too much, you're not allowed to make a contribution to a Roth IRA. Well, there's a workaround to this, right? And it's called a backdoor Roth IRA. Make that contribution to your IRA and then make the conversion, because there's no income limitations to conversions, right?
Yeah, and that's great. If you're a successful business owner, you can even do that with a SEP IRA.
That's
Is
right.
that right?
Yep, that's exactly where I was going. Great leeway.
and so you can take advantage of that, up to $70,000 contribution that you can put in a SEP IRA. And if it makes sense for you, you can convert all that this year.
That's right.
So really, it's a great way to put a $70,000 contribution into a Roth IRA. Tanner, real quick, we got a couple minutes left in this segment. We talk about these kind of options with business owners all the time, right? What are some of the things? Give us 3 or 4 points about what you should be thinking about when trying to set up a retirement plan for both you and your business.
Yeah, the biggest thing to really think about when you're setting up that plan, number one, how many employees do you have, right? Are you a small company or are you a large company? Because that may determine what type of plan or maybe a contribution that you have. Because if you're trying to attract employees, right, benefits are a very, very important thing. I think we're seeing that a lot right now, especially with our small business owners. I see it a lot on the health insurance side right now, that these business owners are getting constrained a little bit with these small groups, right? Because these small group rates could be potentially based off of maybe the health history that previous year for the employees. And so when rates go up, typically it could be a mix of maybe unhealthy people on the plan, but also ages of that person. So maybe having an understanding of that, because health insurance, I think we can all agree, may not be going down in premiums or cost, right? If anything, maybe one of the most highly inflated pieces of it. So having good benefits, having good life insurance, maybe accident policies or critical illness policies to help supplement your employees in that time that something happens, right? Because we all know that those rainy days do happen for our employees. And so making sure that we're having attractive benefits to be able to attract them to our companies and help build.
Yeah. So our first segment here, we're talking to business owners today. We're going to talk about life insurance. We're going to talk about some benefits for employees either. But in this first segment, we talked about retirement planning. I invite you to go to plantodaytaxbill.com. That's plantodaytaxbill.com and figure out how this can affect your tax situation. You can go in and plug your real numbers in there, use what your tax rate is now and what you think tax rates are going to grow to in the future, and figure out how much of a benefit this can be for you and your company. So when we come back, we're still talking to business owners today. Tanner, Tim, and I are going to switch gears, and we're going to talk about life insurance, both from a business planning standpoint and as an individual standpoint. So bear with us. Stay with us. We'll be back here in just a few minutes.
In the U.S., it takes an average of 12.5 months for families to legally resolve all financial matters after someone passes away. As a financial advisor, I realize how delicate it can be talking about end of life and financial matters. But that is why I'm here, to help make that hard conversation about taking care of your loved ones easier to have. What if your beneficiaries need some funds sooner than 12 months to cover medical expenses, funeral costs, or monthly bills? That's where Guardian Investment Advisors has you covered. There is a financial solution where we would place a portion of your assets you're already planning on leaving to your loved ones into a guaranteed issue life insurance policy. Within 48 hours, these funds can be provided to your family with confirmation from the funeral home. I'm Gary Thurman, CEO of Guardian Investment Advisors. We are your neighbors right here in the Tennessee Valley. Call us today. Your peace of mind starts with a simple conversation.
Welcome back to Plan Today, Own Tomorrow, brought to you by Guardian Investment Advisors. We're offering financial advice to folks in the Tennessee Valley and beyond. Today, we have a show that we're specifically talking to small business owners, an exciting topic for us, something we talk about every day almost, and we love to work with people that are entrepreneurs. You know, we're entrepreneurs here ourselves, aren't we, gentlemen? Mm-hmm. And so in our first segment, we talked about retirement plans for small business and small business owners. So if you have any questions about that, give us a call at 423-710-9199. We'd be happy to talk you through that process and how that can fit as a tool in your business. We're going to move on and talk about life insurance on the second segment. Life insurance is something that's often overlooked by business owners, but it can be important in how you plan for your business and how you help your employees. Right? Life insurance is a great benefit for a lot of folks, especially when they're younger. So it's something that if you can afford to offer in your small business, it can be a big benefit for you growing. So, Tim, how does life insurance fit in a small business planning?
It's a great question. Life insurance itself is designed to help those that you leave behind after you pass, right? And so how do we use this in small business? Well, there's sometimes some very important things that happen. There's something called key man insurance. You may have a small business where one of your guys, two of your guys, maybe a few of them are the big revenue producers inside of your business. And if something were to happen to them tomorrow, you know, how long is it going to take you to find somebody else to replace that person? You know, how do you help take care of their family, X, Y, and Z, right? And so what key man insurance does is you place a life insurance policy on that person who's a high revenue earner for your business. And if they do pass away, it allows you to take in a lump sum of cash to help float you until you're able to replace that person. On the other side of that, you may have somebody in your business who's a partner or a
You may own that business with you, right?
correct, yeah. And so what happens if that person passes away, right? Do you have the cash right now to go and buy out their portion from their family, or are you just going to be a business partner with their wife, spouse, kids, whoever the case may be, right?
Yeah, that's often overlooked, and we've talked to a lot of people about in a previous life. I used to do a lot of estate planning work,
Yep.
And if you own a piece of a business, that's your business and your asset to do with as you please when you pass away.
That's right.
You want your family to benefit from that ownership in that business, right, Tanner? And so the issue is if we were business partners together and I passed away, I'd leave my share of the business to my wife.
That's right.
I love my wife dearly, but she does not know anything about investment management and retirement planning.
Right.
Right, Tanner? So
Yeah.
now all of a sudden I'm gone and my wife shows up in my office. Probably wouldn't happen, but it could, right? And so what would happen there? And so what this Key Man Insurance does, Tanner, is allows you to have the liquidity to buy my share from my wife.
Absolutely.
So those are really two important business planning tools that life insurance can fill. Tanner, let's talk about it a little bit as a retirement planning tool.
Yeah.
Life insurance can be a retirement planning tool?
Yeah, it can be. You know, there's obviously, like Tim was talking about earlier, there's various types of life insurance. Obviously, the most affordable and efficient life insurance would be term. You know, Tim talked about Key Man Insurance, but there's also, permanent policies out there that could build cash value. And those could be important for that person that may have some excess in cash flow, right? Something that they can store away, but also build up that value over time, right? Which they may be able to use down the road tax deferred, right? Or be able to borrow against it potentially. Now, it's really important to stress in this that these are all different types of vehicles out there for retirement, right? It's not a one-size-fits-all, program in a sense. And so I think it's really important to stress that sometimes permanent life insurance can be designed improperly, or it can be explained to people improperly.
Yeah, they're
potentially.
complicated vehicles, right?
They are, exactly. And so it is good to talk to somebody that is going to give you all your options out there and not just say, hey, listen, this is the best thing for you. You need to put everything into this type of policy here because you're going to get tax-free income down the road, because there's a lot of people out there that may present that in a way that can be dangerous.
Yeah, it can really be a tool, Tim, for somebody who maybe has a sufficient cash flow to fund a lot of these retirement plans that we talked about in the first segment. And they say, I've still got some extra money. I kind of want to put something else away. How do I do it? Maybe permanent life insurance is that next retirement savings tool.
Yeah, this could be a good way to diversify the portfolio, right? I think people think about diversification and they think, well, I got to own a certain number of stocks to be diversified, right? And to be fair, that's somewhat true. But if you want to step outside of the market, you can diversify in other ways. You could buy real estate. You could buy life insurance. You can get into annuities. There's a lot of different investments out there, right? Even private equity. Well, this is one of those ways to do it. The nice thing about this, and what's the attractive draw to life insurance plans, not only are you carrying a death benefit, you're growing a cash value that you can take loans from later on in life. And what's nice about it being a quote-unquote loan, you're borrowing from your future death benefit, meaning that the cash value is still growing for you like you didn't pull anything out, as well as loans are tax-free. There's no taxes owed on debt, right? And so you're getting a couple of added benefits there. One of the big things that I use this for is, we want some diversification. Those things are nice, but, what happens if I get seriously injured but I don't pass, right? Yeah. And so a lot of these programs have what's called living benefits on them, and you're in a tight spot. You're not able to work, but you didn't pass, so your beneficiaries don't get that death benefit. Well, living benefits allow you to accelerate that death benefit and give you some cash early on to help take care of you while you're in maybe a hospital or going through a tough time.
Yeah, some of these programs that we look at, you can accelerate up to 75% of that death benefit.
That's
and
awesome.
So if you've got a big death benefit, waiting out there for your family, and to your point, you haven't passed away.
Yep.
You can get some of that cash now to help figure out how to bridge that gap until you unfortunately do pass. One of the things I like about permanent life insurance as a retirement vehicle is you have a lot more flexibility, right, than a lot of these traditional retirement plans. A lot of these traditional retirement plans, you can't get at that cash until you're 59 and a half without paying a penalty. Life insurance as a retirement benefit isn't like that, right? If it's designed properly, you can get at the cash without any kind of age restrictions. Is that right, Tim?
Yep. Anytime you want to, you have accessibility to it, and you can pull or borrow cash from it, put it back in there, whatever the case may be. And so it has some flexibility in that sense. I'm going to throw out one tool that we use on occasion. If you are a really high net worth earner, and the SEP IRA may just not be enough for you, right? $70,000 a year is nice, but it just doesn't get you to where you want to be. There's something called a 412E3, and it's considered a defined benefit program. It allows you to throw a couple $100,000 a year into some different programs, tax deferred. And you can do that through a market strategy account, or you can use things like life insurance and annuities to help fund that program at the same time. This has been a big benefit to a few business owners that we've worked with before, to allow them to stuff away a large sum of cash in the first 5-10 years. And then it creates a really big retirement account really quickly for them.
It's kind of like creating your own pension, isn't it?
That's right, yeah.
Pensions have pretty much gone away. And it's an option as a small business owner to offer a pension, but that's on your books, and you got to make sure that's funded properly. So a great way to fund a pension for yourself could be these. Say the numbers again, Tim.
Yeah, 412E3.
412E3 sounds like a Star Wars character.
That's right, that's
Yeah, but it's an obscure reference to the tax code that allows this, and it's a great benefit. We'd love to talk to you about it if you are one of those successful business owners that wants to save a little more, right? Wants to make sure that while your business is producing this cash flow, you're providing for your retirement. And speaking of your retirement, that's a key word for us. If you're interested in talking about your retirement in particular, I invite you to text the words "your retirement." That's "your retirement" to 877-706-7526. Last time, that's "your retirement" to 877-706-7526. You'll get a copy of our retirement guide that will talk about a lot of these options and more. Take a look at it, read it, and give us a call here. We'd love to discuss it with you. So life insurance, again, can be a great planning tool for a business owner, especially as you're trying to build wealth, as you're trying to make sure that your business has a continuity plan.
It gives tax planning now, gives tax planning in the future, gives you some death benefit protection, some living benefits. I mean, it really covers a lot of bases really quick.
Yeah, and it's also, Tanner, a great benefit to offer your employees, right? And so this is a planning opportunity and space that you're in a lot is group benefits and other plans that can help supplement around your main retirement plan. And we don't have a lot of time in this segment, so I just want to ask you briefly about what some of these options are, and then when we come back, we'll really dive into group benefits and how they can fit into your financial plan.
Yeah, offering them to your employees could be an attractive feature because we talked earlier about, how can we attract key employees and good employees to our businesses. It can be a pretty inexpensive way of offering some life insurance, something that will help those employees in the case of the inevitable unfortunately happening, and now their families are stuck with maybe a loss of income, right? Because obviously, if we're all working and we pass, maybe our kids or our spouse isn't having the same income coming in that it is happening right now.
Yeah,
it
happens all too often.
Yeah, it does. And so it's really important to make sure that you're offering those benefits or that you find somebody that's going to help you with that.
Yeah, great point. Today on Plan Today, Own Tomorrow, we're talking to small business owners, planning opportunities that they have, ways that you can fit these different pieces into your retirement plan as a small business owner. If you're interested in talking about this and specifically taxes, plantodaytaxbill.com. Plantodaytaxbill.com is something we've put together completely free on our website, and you can go there and figure out how these different planning opportunities can really affect your taxes currently, and I would argue more importantly in the future. So when we come back on Plan Today, Own Tomorrow, we're going to talk about group benefits that you can offer as a business owner to your employees and some of the benefits they can give. Stay tuned. We'll be right back on Plan Today, Own Tomorrow.
You might not be able to retire if you haven't thought about future inflation and future taxes. When you're going through your retirement plan, are you thinking about inflation? Does your current plan have inflation built into it? The national average is about 3%. Of course, it's been really, really high the last few years, but it has come back down. But you got to build inflation into your retirement plan because we don't want to run out of money. Another thing I stress to my clients all the time is we got to think about future taxes. Our government has one source of income, and that is taxes. And I promise you, with $34 trillion in debt, $2 more trillion being added this year in 2024, the interest only on our national debt is $1 trillion. Folks, taxes are going to go up. You got a window of opportunity in 2024 and 2025 while taxes are still on sale. Let's start looking at maybe taking some of your taxable money to tax-free money. This is all part of the Wealth Guard planning process. We'll do this for you when we're creating an income plan. You got to think about inflation and you got to think about taxes. Give us a call today and come in and see myself and my team, and let's put this plan together for you.
Tennessee Valley, welcome back to Plan Today, Own Tomorrow. I'm Bobby Futch with Guardian Investment Advisors. I'm joined here by Tim McDermott and Tanner Moore, two of our other advisors here at the firm. Today we're talking to small business owners. We've talked about retirement planning. We talked about taxes. We've talked about life insurance. We're going to get into taxes a little bit more here late in this segment because it's a huge concern for everybody today, especially small business owners. But we're going to spend some time first on group benefits. You know, one of the biggest challenges for business owners is attracting and keeping good employees. Tanner, let's talk about some of the benefits that are out there that business owners can offer their employees that can help with retention.
Yeah, the first thing and maybe the most expensive cost is going to be health insurance, right?
Mm-hmm.
Major medical insurance is a very, very good benefit to have to be able to attract employees to your firm or to your business. But and when I say it's expensive. It can be, especially when you have that 25 or less type of group, right?
25 people or less, right?
25 people or less, correct. And so a lot of times you may see that the employees come in, but they're using their spouse's coverage because they're able to find more affordable or more attractive coverage that way. And you know, it's just actuarial numbers, right? A larger group could potentially spread out the risk a little bit more. And so your premiums or the cost may be a little bit more attractive than that smaller group. We talked in the last segment about if maybe somebody were to get hurt or injured or sick on that plan, the next year, maybe that rate goes up by a good amount, right? Mm-hmm. And now it becomes a conversation. How much do I continue to pay for my employees? Do I have to reduce benefits or what options should I give them? And so there's a lot that goes into it, and there's a lot of really, really good group brokers out there that can help with that. And if you need a couple of those, feel free to call me because I've got a great option for yourself. I myself don't focus on group benefits, more on the individual health insurance side with Medicare planning or post-group, I call it, because you're going to retire at some point. Yeah. I can help in that aspect of it. But there's a lot of good things that you could also supplement with that, per se, maybe a high deductible plan with a critical illness or an accident policy. That may be a way to customize your coverage to be able to get those rates down, but also be able to attract good employees.
Yeah, I'll say this, right, because I'm in one of these situations where I'm technically a self-employed individual, right? And so it's very expensive for me to go out there and get health insurance coverage. And so my wife, one of the most important things she was looking at when she was looking for a job was, what's the health coverage look like? What kind of benefits do we get through that? If you're a small business owner, you know how expensive it is, right? And so your employees are looking for that benefit, and they're looking for a decent benefit there.
And we see a lot of times people calling here that own their own business. Maybe it's a husband and wife that own their own company. They have a couple of employees that have health insurance elsewhere, so they don't have to worry about them. And maybe we're able to find that individual coverage for them. Those are the people that I love to work with because I see some plans that come in here that we're able to save them a lot of money, right? These are expensive policies for a family or just a husband and wife, you know, an employee and a spouse. So being able to find options out there for people that actually pay out, because it's very, very important to understand what limited benefit plans versus major medical is. The Affordable Care Act, those ACA compliant plans, it's really important to understand what types of plans are out there because every type of plan is different and the fine print is very important.
Sure.
Yeah, that's exactly right. And everybody needs medical insurance, right? Since the ACA passed, it's actually a requirement. You know,
That's
whenever we do our income taxes every year, they ask if you had major medical coverage.
Right.
And if you don't, you know, not only were you kind of in a situation where, you know, God forbid something happened to you, you could be paying out of pocket, but then Uncle Sam's going to tack on an extra little penalty on your income taxes as well. So it's really important. And Tanner can point you in the right direction. You know, if you have questions about medical insurance, whether that's group, and he can point you to somewhere that we trust or an individual policy, give us a call at 423-710-9199. That's 423-710-9199. This is such an important part, gentlemen, of financial planning that's often overlooked by a lot of planning firms. Tanner, you do this every day.
Yes.
And I've seen you. You stay pretty busy.
Yeah, we do. We do.
You stay pretty busy.
And it's really important to understand out there that we can get lost in the shuffle of just life in general, right? Kids, families, our day-to-day routine, we can get lost in translation when it comes to that. So it is important to understand it, and we're not going to get into politics, obviously, in this show, but you know, when it comes to which administration may be in office, that could dictate the options or the laws that are put for people on the styles of coverage that they may be able to get.
Yeah.
So it is important to understand all your options and that it can change. That it varies depending on maybe potentially who's in office and what laws are coming down the pipeline.
That's a great point, Tanner, and I think it's often overlooked on that aspect as well. You know, when we put a retirement or financial plan together for somebody, it's not a set it and forget it situation.
Yes.
You've got to review that at least annually, you know, to make sure that your situation hasn't changed, make sure the legislative situation hasn't changed. There's a lot that can affect your retirement plan. And I think I heard you say it's the same thing on the medical side, even
Yes.
more so.
It's important to stress, and the person out there that may be on the marketplace, right? There are items out there called APTC. That's called Advanced Premium Tax Credits.
Okay.
The humor in the Affordable Care Act, when it was passed a little bit over a decade ago, was that when the plans rolled out, they were unaffordable for most people,
Yeah,
right?
sure.
Well, it comes into place that these laws were in place that these private insurance companies have to take people as is. Pre-existing conditions have to be covered, right? Well, just from an actuarial standpoint, these insurance companies, of course, are going to make the rates higher because they may have to take more unhealthy people. And so over time, there's been a science that's been put into place that calculates these tax subsidies, right, or these premium tax credits, depending on the income, the household size, per their tax return, how many people they're claiming or filing with, right?
Sure.
And their zip codes and the income amount, right? So it's become very affordable for that middle class family that may be a family of four that makes $60,000 to $70,000 potentially, right? Maybe they're going to be able to have affordable coverage on the marketplace, but there's laws in place. You can't have group coverage offered to you through an employer, right? So it's important to understand what your limitations are, but also, like we just talked about, these advanced premium tax credits are sunsetting at the end of this year. The Congress is going to vote on them this fall, right? Are they going to be, reinstated or voted upon to extend? Maybe, maybe not.
We
right?
could see a big change coming down the
But
pipeline.
I feel we're going to see a big change, and potentially the cost may be going up. These may not renew for next year per se, and costs are going to go up. So it's really important to review that coverage if you're on the marketplace.
Good point.
Yeah, a lot going on in the healthcare space, obviously, Tanner. So it's important to make sure you're staying on top of your coverage, even if you have something in place already. Don't put it on the shelf and forget it. It's important to make sure that that's going to continue to be a good fit for you. Tanner, let's talk about something I like to call healthcare insurance light for a second. Indemnity policies.
Yes.
They work a little different than major medical. These are your cancer, stroke, heart attack policies. You can insure for those events, and it's really affordable, isn't it, Tanner?
Yes, it is very affordable. It's exactly what you just talked about. It's an indemnity policy, which means if a policy states that it's going to pay out a certain amount for a certain event, it's exactly that. If that event happens, it's going to pay out whatever that amount is per se. So I love to write lump sum cancer policies for individuals. There are indemnity policies out there for cancer. Maybe there's a an animal or something that's
Yeah.
on the TV that walks like a blank or talks like a blank.
Fishes with Deion Sanders and Coach
Maybe,
Saban.
right? We're not
Yeah.
going to talk about it. And there's some great people in that space. But some of those plans out there, and I'm not speaking specifically about that company, right? There's other companies. Maybe it pays per chemo treatment, per radiation treatment, right? Well, there are plans out there I love to ride. There are just lump sum policies for cancer. You get diagnosed with cancer, we submit a claim. Within 7 days, you're getting cash into your bank account of whatever the amount is you took out.
Are these considered like add-ons to an existing policy? Do you have to have a different like health insurance policy, or you can go out and buy these solo?
You can buy these solo, right? So the person out there that says, I just want to insure with all these policies, maybe that's not the best thing, right? Because I have, it's a low probability of happening, but I've seen a $5 million burn claim medical bill before, right?
Wow.
And so when it comes to limited benefit plans, or it comes to plans that there may be limitations on the major medical side, short-term plans may only pay up to $1 million in claims, right? That's still a great amount of coverage, right?
Sure.
But what happens if those medical bills topple over that? Well,
Yeah.
you have to foot the bill. You're on the hook for that.
So what I'm hearing is these are not a replacement for
Correct.
major medical insurance, but it can certainly be an add-on because most all these major medical insurance plans have deductibles.
Well,
and you're going to have to pay those deductibles, so
and
these
it's
can help.
and it's about the style of how you build your health plan, right? So there may be a family out there that comes in, and I've had it happen before. Tanner, I want the lowest deductible possible, and I want the best drug plan possible, right? Well, if I show you a really good prescription drug policy in your plan, I'm going to show you a really high premium, most
Right.
likely, right?
Sure.
It's the biggest liability. So maybe you're healthy, maybe the family's healthy. Maybe we can risk having a higher deductible plan, because if you're going to hit a high deductible, most likely something bad's happened, a hospital stay, a surgery, or so forth. But we're able to have that lower premium or that lower cost plan and bundle it with these individual indemnity plans, maybe a hospitalization plan, hospital confinement. That may be a way to offset the expense and be able to help build that plan.
That's a great point. Today we're talking to small business owners on Plan Today, Own Tomorrow. We'll be back for our final segment here to talk about our favorite thing, taxes.
Taxes.
Here shortly. But I invite you to go to our website, GIAplantoday.com, GIAplantoday.com. You can find all of the quizzes we talked about today. Take one of those quizzes. Take all the quizzes if you want. Get the results. Give us a call. We'd love to sit down with you, whether you're a small business owner or not. Stay with us. We'll be back shortly on Plan Today, Own Tomorrow.
Too many people enter retirement without a plan or a tax strategy, and it costs them. Every dollar you save from taxes is a dollar that can be put to work to help secure your retirement. At Guardian Investment Advisors, we have the experience and the expertise to create a customized financial strategy that includes smart tax planning. It's not about quick fixes or magic formulas. It's about building a comprehensive, tax-efficient plan. We're offering a no-cost portfolio and tax strategy review to get you started. Schedule an appointment with us today. You'll be glad you did.
Tennessee Valley, welcome back to Plan Today, Own Tomorrow, brought to you by Guardian Investment Advisors. Offices here in Chattanooga and our brand new office in Knoxville, Tennessee, which we're excited about. That'll be open shortly here, within the next week or two. So we're excited about that, being able to help folks up and down the river. And, we like to go to Knoxville every once in a while. I think there's a couple of good football and
what I've heard.
baseball teams up
what I've
there. So we're expanding our footprint to be able to help more and more people. Today we have a show we're talking specifically about small businesses, their owners, and how they can plan for their retirement, how they can help their employees secure financial readiness and move into retirement. We've talked about retirement plans. We've talked about life insurance. We've talked about major medical and other medical group benefits that we can offer and help people put into place. In our final segment, we're going to talk about the biggest thing out there for really everybody now that's putting a financial plan together, whether you're a business owner or not, and that's taxes. Tim, how are taxes going to affect people in retirement? That's a big question.
Well, you got to pay them every year, right? There's no getting around that, unfortunately.
And sometimes more often than that.
That's right. But I haven't met anybody yet that wants to voluntarily add to that check, which just tells me that, hey, folks are looking to pay their fair share and probably not a dime more than that, right?
That's right.
And so there's several ways around how do we reduce taxes, whether that's now or later on in life. We talked a little bit about this in the first segment. We're at an interesting time in our history where we've seen we're in the third lowest tax bracket in U.S. history, right? And so how do we take advantage of that? Well, if you're in a position to do so, it might be a good time to pay some of those extra taxes right now. It may be a good time to say, let's take some of that money that I put away in 401ks that I got the tax deduction on for while I was working in that higher tax bracket, pay those taxes right now, and put myself in a position to be tax-free throughout retirement, right? It may be that maybe you're an entrepreneur, maybe you're a business owner that's out there. That's who we're talking to today. You may be in a really high tax bracket right now, and that's not the priority. The priority is saving as much as we can on taxes. So how do we do this, right? We talked about making contributions to those retirement plans that are out there, whether it's a SEP IRA, a 401k plan, maybe a simple IRA, or even just a traditional IRA, right?
Yeah.
If you're using 401k plans, it offers the most flexibility to you and to your employees. There's a cost that comes with that, right? So we have to pay some of these 401k fees and costs that are associated, but you're adding a major benefit to yourself and your employees at the same time and taking several tax deductions along the way.
Yeah, so that's truly a business expense.
That's right.
Running these retirement plans, which as they get bigger, can be pretty significant.
That's right.
And so again, that just comes off the profit of your business. And so as it's a business expense, you're not paying income taxes on that.
And that's true for these group benefits that Tanner was just talking about as well, right? And all these, the health insurance is expensive, but that's a deduction for you as an employer, right? And so maybe instead of, hiking up their salaries to whatever number it is, maybe you offer that health insurance plan to them as a golden handcuff, right? It's a benefit to them. They see it as a value, but you're not necessarily just writing bigger checks to your employees at the same time, right? And so that works in multiple different manners. One of the things I'll say about retirement plans, they don't have to be complicated. We can set these up to be very simple to accomplish the goal that you're trying to do. I've got several companies around town I help run their 401ks for, some simple IRAs in town, and even just doing some SEP IRAs for small businesses, maybe just individual business owners, right? These are tailored to fit what you're trying to accomplish at the end of the day and save taxes along the way.
Yeah, it's really a complicated piece of math, really, when you try to talk about, is it better for me as an individual or as a business owner? Is it better for me to save taxes now or in the future? And there's a lot of variables there. We talk all the time about being in the lowest tax bracket. The United States has got quite the debt to pay, right? And they're adding to it every year.
There's a Cash App now that you can voluntarily send cash to pay down our deficit. Yeah, if you want to do that. I don't know anybody who has.
All right, so if Elon Musk is listening to our show, right, to be serious though, $37 trillion in debt and growing. We add about $2 trillion a year to the debt as a country. Over $1 trillion a year, with a T, $1 trillion goes to just pay the interest on the debt we already have. And so it's something you really need to pay attention to is if you're in the situation now that you're going to retire and have a pretty strong income in retirement, which is the plan for all of us.
Right.
Sure.
Right? But that income still comes with an income tax liability. So it's really important to sit down with us, with your CPA, and figure out whether or not it's better for you to take that income tax deduction now, knowing that at some point you're going to have to pay income taxes on those distributions and withdrawals, or can we put together a Roth conversion strategy for you, or just a Roth contribution strategy if you don't need the tax deduction now, to make sure you have tax-free income in the future.
That's right.
It's something that we talk to people about almost every day now. And Tanner, I'll just put you on the spot. What do you think taxes are going to do in the future?
Well, we have an important year coming up next year. So next year is the year 2026. Do you either of you know what the important historical landmark of that year states for this country?
I think there's a few out there, but I'm not sure which one you're referencing to. It used to be a sunset, right? Our taxes were going to sunset, but that's been kicked down the road.
Even more basic than that. 2026, if we go all the way back to 1776,
Sure.
we're looking at the 250th anniversary of this country's Declaration of Independence,
Yep.
right? 250 years is a long time.
It is.
Mm-hmm.
We're in the third lowest tax bracket we've ever been in this country, right? What are the odds that it's going to go lower?
I completely agree.
And so, really, the thing to stress here is taxes are on sale right now, right? With the current tax laws extended just a little while with this administration, right? We have a window of opportunity right here.
Sure.
And that window of opportunity may be pay some of the taxes now, right? So you're able to save on that later and be able to grow tax-free later. It's important to stress that for everybody out there, because a lot of times we get busy. I can take care of it later. I can put it off, right? Take advantage now while taxes may be on sale.
I would agree with that as much as possible, right?
And go to plantodaytaxbill.com. Plantodaytaxbill.com. It's a free tool we set up, available to everybody, and you can kind of work your own numbers. It's a really neat tool. I've done it myself. Figure out the tax bracket you're in now. Just go look at your income tax return.
Yep.
That's easy to find out. And then just play with some numbers and think, what do you think taxes are going to go up in the future? You can plug those numbers in, figure out what your tax burden may be when you retire, and then what you can lower that to by taking advantage of Roth conversions.
Yeah,
so-
here's
ahead.
one of the interesting thing about doing Roth conversions. Unfortunately, being a business owner has its own set of volatility rules with it, right? It's never just straight across the board. It's not like collecting a salary. You're going to have up years, you're going to have down years. When you have those down years, when you have big deductions in a year, things like that are happening, it affords you that ability to say, this is the time to take advantage of doing that Roth conversion, or this is the time to take advantage of adding that tax to that year. And so you can play that year by year and make it make sense.
Yeah, that's a great point, but that means you've kind of have to keep track of that as it's happening.
Sure.
And so if you're a business owner and you're not having regular conversations with your financial planner or your accountant, maybe you should start doing that. You might be leaving some benefit on the table when you have, again, some slower years or some years with higher deductions. Take advantage of that. That may be the prime opportunity to convert some of your pre-tax retirement money to tax-free money in the future. Again, if you're not having these conversations, you very well should. Let's finish up this segment with some real-life scenarios.
Sure.
Tim, you mind sharing a story that we've helped a business owner with? Kind of some things for us to be thinking about as business owners?
Yeah. I just met with a guy recently, and he was able to open up his own business here in the last few years. When he did that, he came from a corporate job where he was able to take a old 401k that he had that was laying out there, roll it into a traditional IRA. Now, why is this helpful for him, right? Well, the traditional IRA was stuck inside of 1 or 2 dozen different funds that were out there.
His 401k was,
Yeah,
right?
I'm sorry. Yes. Yeah. His 401k was stuck in one of these funds that are out there. If you have a 401k right now, chances are you got about 2, maybe 3 dozen different options inside of there. And most of those are usually just variations of the same option that's there. And so it lacks the ability to diversify what your setup is. And he wanted to get in the market, make some extra make some extra gains that are out there and get away from the bond side of that portfolio that he was in. So we're able to roll that into his own traditional IRA, increase his diversification, and set him up for the ability to really grow that fund and make some options that weren't available inside the 401k plan for himself.
Yeah, and that rollover is completely free. It didn't
That's right.
cost him a thing.
Yeah, it's not a taxable event. The other thing that he was talking about is potentially doing some Roth conversions, because he's in the first few years of opening up his business. And so you guys know that can be expensive, right?
Mm-hmm.
And so chances are he's got a lot of deductions coming up in the next few years, and it won't show a lot of income. So it's a great opportunity for him to do that Roth conversion, which he was not allowed to do inside of his 401k
That's
plan.
a great point. That's a great point. Tanner, you have any stories you can share?
Yeah, I have a really good story. Prospect called in a few years ago. They're still clients to this day. Person's paying a lot for their health insurance for themselves and for their spouse. They're on a high deductible plan still, but they said, Tanner, we didn't have any options. We didn't know that people like you exist, the individual broker out there.
It
right?
sure is unique, isn't it? Yeah.
I've been told that a lot. I'm very, very, very special. My mom told me, right? And this person's paying a few $1,000s a month on their health insurance. Now, a higher net worth client, so that, we can afford that,
Yeah.
right? But still a lot of money that maybe we can save on it, right? And we're able to pretty much cut that premium in half. You know, obviously there's questions that need to be asked. What's your current health like, pre-existing conditions? Because we're going to customize it and tailor it to, number one, your current health, but also your risk tolerance, right? How risky do you want to be if in the event that you go to the hospital, right? High deductible versus low deductible, co-pays versus co-insurance. So all these factors vary and depend on that, generate a cost to that premium. But in this case, we were able to save that person, essentially half of what they're currently paying, right? Same type of coverage. So they just called the carrier, got a price, but then they talked to me and they're like, wow, we didn't even realize you exist out there.
Awesome.
And so it's really important to stress that person that needs to find individual coverage, call someone like us. We love to help with that.
Yeah, give us a call at 423-710-9199. That's 423-710-9199. Today on Plan Today, Own Tomorrow, we talk to small business owners, planning for your business, planning for your retirement. It's a complicated situation. It's something we help people with every day. You know how to run your business. We know how to help you plan for that business. It's, again, call us at 423-710-9199. Go to our website, giaplantoday.com. You can find a list of all the calculators we talked about and even more. If you have any questions about what we talked today, please don't hesitate to call us. Gentlemen, great show today talking to small business owners.
Enjoyed it.
I appreciate everybody listening. We look forward to seeing you here soon on Plan Today, Own Tomorrow.